Dubravko Lakos is the head of equity strategy and global quantitative research at J.P. Morgan. Back with us. Good to see you.
Thank you.
Mr. Bull. The headline for you today, as Patty Martell tells me, our senior producer, market nirvana. That's what you say we're in, or about to be.
Yes. So, look, we're basically seeing one of the best environments for equities, in a number of years. You've seen a lot of risks that the market has basically had to cope with and has struggled with, ranging from, global trade war, obviously the pandemic this year, all of the uncertainty around U.S. politics, the election. A lot of these risks are subsiding, and I think that's going to help, broadly speaking, risk sentiment. It's going to help sort of put capital to work. Business cycle is recovering. And you were mentioning, some of these call it tailwinds even in these prior minutes. But, whether you look at the liquidity picture where money supply is growing at about 24% year over year, biggest increase since 1940s. Whether you're looking at the fact that vaccine distribution is around the corner, 1Q, 2Q, that's going to continue to propel this recovery. Whether you look at the fact that S&P 500 is sitting on record high cash balance, ex-financials, we're looking at $2.1 trillion in cash. Some of that cash will get released and it will help revitalize CapEx. M&A, I think, is looking good. Buybacks could start coming back. And then the last thing I'll mention is positioning. Positioning has gone up, but it's still below average. And in fact, we estimate, we're looking at about $1 trillion worth of equity inflow / equity demand coming from systematic flows, hedge fund positioning, further retail buying, buybacks, and very importantly, continued rotation from non-equity into equity. So we're looking at a pretty positive environment, especially for the first half of next year.